entertainment, insights. Don't take life too seriously. Welcome to Brainsky Unleashed. Welcome to Brainsky Unleashed. I'm very excited today because I've got a very special guest. So joining us is Jeff Mohlman. He is with Lifetime Advisors. He's a partner of ProfitMax. You hear our commercials on our show all the time. Of course, I am also an agent of ProfitMax. I end up working with Jeff all the time. He is a fantastic, brilliant mind. And I thought, I've got to have this guy on the show because he's so brilliant and he can actually help bring some context to a lot of things that we talk about. So, Jeff, welcome to the program.
Hey, Tom. Thanks for having me. Glad to be here.
Oh yeah. So I have a feeling, Jeff, that you and I are probably going to have probably a few shows together. There's so much that we can talk about, and I can't get it into one show. It would just probably be too long. So we'll just say that this is going to be show one, and we'll have you on again. Let's just kind of get rolling here real quick. You and I were talking recently, and you were saying that, and this is something that even through our research that we've done with ProfitMax, that most business owners are unaware that their CPAs are probably not actually doing what they should be doing for them. Can you kind of go into maybe one of the differences between like a tax planner who happens to be more of a CPA versus just a conventional CPA?
Certainly, Tom. So to kind of bring some context to that, so in tax planning, it's about doing things that the CPA doesn't have the time to do. There's a couple reasons for that. So, Tom, I don't know if you know the statistic that was put out by the AI CPA several months back, but the CPA world has lost due to either early retirement, or just burnout 400,000 CPAs in the last 2.5 years.
That's a
And
massive
it's a big
number.
number.
So 400. What you're saying is 400,000 CPAs, and this is not retirement. This is just getting out
Yeah.
of the business, right?
Yep.
Before we go further, why do you think that is? I'm just curious. Like, what's your opinion?
So there's two things that are making this a problem, right? So you got the mass exodus, and then normally you have college graduates, right? And they just fill in the gaps. The Wall Street Journal had an article recently. I don't know how long ago it was, but it was fascinating because it talked about how the young people are not going into the CPA world. And they had a graph on there, and it showed accounting and finance jobs, including wealth management and corporate finance, things like that. And they showed the pay scale and how in the CPA world, it used to be young people would go into that world, go to their parents' practice or a practice because it was the upper middle class lifestyle they could have. And the value to a practice has dropped. The income a CPA makes has dropped dramatically, not kept up with where it used to be. And so young people are saying, yeah, I'm not going to go do that. And the CPAs they're overworked. So you go back to pre-COVID, and all the tax law changes that were happening every year were causing them to, at the end of their tax season, they would have to go into massive CE mode just to keep up with the changes. And then before they know it, tax season's here again. And they didn't get a break. And burnout, I myself know two CPAs that died during tax season of stress related issues, health issues. One of them was 44 years old. He dropped dead of a heart attack right in his office a week before the filing date.
44. Oh
Uh,
my God. I'm older than that.
yeah.
That scares me. Thank you.
Well, and I tell you, it caught my attention when that happened to the two CPAs that I knew, because it made me start to wonder, what is this pressure? So, that relates to the whole idea that the CPA doesn't have the time to do the things that we do. On the tax planning side, you know, we have CPAs that do tax filing. We do a lot of tax filing for business owners. We have a lot of bandwidth because as more of these CPAs leave the business, they're not their practice isn't being absorbed necessarily by other CPA firms or purchased, because those CPA firms are busy and so many of them aren't taking new clients. So that brings us to the tax planning point. And you brought it up, and I'll say it like this. The CPAs that I know don't have time to do tax planning. They have a couple hundred clients. Sometimes they have 300 or 400 clients, And the idea that they would have time every quarter or every 6 months to sit down and have a meaningful conversation about tax reduction strategies just isn't there, because it's a whole nother level of knowledge. They would have to go and get educated and trained on those different aspects of the tax code, because it's not your run of the mill tax return. You're doing some serious tax planning using the IRS code to the business owner's advantage.
So we on the Profit Max side, we actually did a research project to try and figure out some of this, so that way, we can be more intelligent about it, and serve our clients better. Um, One of the things that we uncovered was that most CPAs are using between about, say, 17 and 25 easy deductions. Like, these are your basic
Hmm.
deductions that you can use for, a high net worth individual or business, just to process them through the system and get it done. But and has a
Yep.
pretty good bang for the buck, but not necessarily really diving deep. So, can you give me like maybe two or three examples that would be outside of that range, that maybe people just most CPAs don't even consider? I realize there's 75,000 pages of tax code and tax regulation and tax guidance that we were able to dig up, but most CPAs are not focusing on all 75,000 pages, right? So, like, what are about, maybe two or three things that you could just tell people, hey, you know what, you should probably look at this.
Well, what's interesting is we have a lot of business owners that come to us, and just on the most basic level, they need a change of accounting method. They need better bookkeeping. Like, bookkeeping is where so much of this is problematic for a business owner. You'd be surprised how big some of the business owners are that we sit with. 10 to 30 million dollars of revenue, and they still have the basic bookkeeper they had when they were a $1 million company, and so their books are a mess because they grew too big too fast, and the bookkeeper didn't want to say they couldn't do it, so they said, yeah, I can keep up. The bookkeeping is a mess. That actually is a big part of tax planning, is having good bookkeeping. And so it's things like bookkeeping, changing accounting methods because the business has evolved, but the accounting method never changed.
And when you say
Um,
changing accounting methods, I mean, or, help me out here. I'm the village idiot, right? So,
mhm.
are we talking about going from, say, like, cash basis to accrual basis, or is this a little bit more complicated than that?
Cash basis to accrual basis. Sometimes it's even the corporate structure.
Right.
Could be they've been filing as an S corp. Now they need to file as a C corp for planning purposes, and the way that they receive their revenue might have changed, or their receivables. But those are the basic things that you see on the outset. But then there's others as you really dig deeper. More often than not, a business owner, the salesperson comes in, sells them a retirement plan, and the employees don't get into the retirement plan because it's garbage, and they don't even understand how it's going to help them. But they don't realize small business owners have very specific opportunities that give them what they want. Where they have a higher opportunity, opportunity to put in a larger amount of contributions in a given year. And that's what the business owner really wants out of a retirement plan. They want two things typically. They want happy employees that say, boy, I've got something in the palm of my hands working here that I can't get elsewhere, or it's not being offered elsewhere in my community. And I like that. It provides certainty to me in the future. And the business owner likes the idea, wow, this is a benefit to me because I can put a lot of money into this, and it's going to give me a very meaningful deduction. So those are important areas of tax planning that we look at as well. But then it's all these other things that in the tax code that it's not really complicated for a tax planner, but it is if you don't do it every day. And how do you add it to the bookkeeping? How do you reflect that on the tax return? And it could be a whole number of things. So I don't want to get into specifics because I'll
Okay.
be all over the map.
Right.
But it's
Let's keep it
very
focused, Jeff.
it's very significant. Some of that can be done the following year up until the filing deadline, so those are big advantages. I mean, it's a lot of things, like look at the depreciation schedule. We see depreciation schedules all the time where accelerated bonus depreciation was never taken where it could. Real estate is a really big one where a lot of people are missing opportunities. For instance, maybe they're taking accelerated depreciation where they're not allowed to. and that could be a red flag at some point for them. Who's teaching them the right way to do it? That's where our in-house tax planner, whose focus is real estate, is a bona fide expert at that. But then it's also other things like a call I had just recently where the individual had real estate to the tune of about $1 million that they could have taken some accelerated depreciation on that would have dramatically lowered their taxes and allowed him to do the expansion that he really wanted to do with his practice. Because that's what tax planning does, Tom. It gives you cash. Like when you overpay in taxes, you have a loss, you have a leak in the boat. And eventually, if you don't plug the leak, it's a problem. And you may not even realize what the problem is down the road, why cash is tight. But if you took a look at, if you knew you were overpaying in taxes and you could track that every year and you said, wow, now I'm into 300,000 of overpaying in taxes after all these years. Or maybe it's even more dramatic. Maybe it's, 100,000 you're overpaying every year, 5 years later, it's a $500,000. So it's about the ability to increase the cash flow to the business through proper tax planning to help you increase your business to a future higher equity value. That's
So,
truly what tax planning does.
is it fair to say that most likely in our current economic format that we're living through, um, probably a lot of business owners are struggling with cash flow? Probably a fair assessment.
Yeah, and I think, Tom, it hasn't quite hit a lot of business owners yet as well, because if you haven't needed cash, you don't realize how reluctant the bank is going to be to lend. So if you hadn't set up your equity line, now your line of credit, I should say. If you haven't established that and you go to do it now, it's a totally different ballgame. Things changed over the last couple of months. They're going to continue to evolve. Cash is the tightest it's been since '08, 9, and 10. And the reserve requirements for banks changed again, back to what it used to be back when the housing crisis hit, the mortgage crisis. So everywhere a business owner can look to bring cash into the business and the right way. We say, legally, morally, ethically. Because at the end of the day, if you're not doing that, down the road, you're going to need to do it. And if you're not feeling it, it's because you haven't needed to. So maybe you go out and you test the waters and see, is this really happening? I think it was Bloomberg. One of those had an article recently. Somebody had texted to me about the fact we're probably in a recession. And Costco recently had released their 3-month summary of purchases and purchase amounts that the average customer makes. And it's at a very, very significant low point. And it caused a lot of alarm for them because that's another trigger that we could be in a recession or right on the precipice of one.
I think probably a lot of leading indicators that aren't necessarily being reported. I mean, I can see it in my own life. I can see it in my own businesses, but I don't think it's being heavily reported. And there's a lot going on in the news, obviously. Depending on when people listen to this program, currently Israel's at war just because it started like a few days ago. So I mean, that's obviously consuming a lot of the
Hmm.
news, rightfully so. But Jeff, let me ask you this, right? So you've been doing this for a long time. You've been in tax strategy, tax planning for a long time. You were a victim, as I was, of just not seeing the light. Eventually you get that red pill, and you go, "Oh my God, wait a minute, something is wrong."
Hmm.
So just for that background for the listeners before you answer this question, what is it that people should be asking themselves to even recognize that they might actually have a problem? Because I think most people, when you talk to them, they don't even know they have a problem. So, what should somebody even ask themselves?
I think the first step, so I'm going to think back to when I got involved in the tax planning world. So I remember for many years, I would ask my CPA, and he was a good friend of mine. I would ask him, what can I be doing this year to lower my tax burden? Because it was significant. So I'd say that's it right there. Are you paying taxes? Do you feel like it's significant? And when is the last time your CPA sat with you before your taxes got filed, before you got that number that you owe, and showed you how to lower your tax burden that you have right now using the tax code? But Tom, I remember, you know, when I asked him, it was the same answer every year. It was a SEP IRA, simple IRA, solo K. Those aren't That's not tax strategy. That is a strategy, but it's not putting a tax plan together. So the second thing I did was I switched CPAs to someone who said they did tax planning. And what I found was the same result. At the end of the year, it was, hey, why don't you put money into this account? Or why don't you go buy this or that? That's not tax planning again. Now, maybe if I bought a vehicle and I took bonus depreciation because I used it for my business, that would be tax planning. I'd be fine with that. But that's not what was happening. So then the other part of it is, I switched again, got a third one, and this time it was a tax planning team. And that's how I ended up here because there was actually a real plan built with real IRS codes that we were going to use to implement. So the simple question that I've formulated that is all you need to be asking yourself is, when's the last time my CPA sat down with me proactively, showing me how to prepare for my tax return so I can lower my adjusted gross income using the tax code to my benefit? The IRS taxpayer bill of rights, which there is one, and it's actually kind of fantastic when you read it. You're like, wow, I'm only required to pay what I owe and not one penny more. So the tax code is to my benefit should I choose to use it. If I don't, that's my choice as well.
We hear a lot from talking heads in the media, from politicians, the phrases, the paying your fair share, right? Uh, I sort of have asked over the years, what in the living hell is a fair share? They never tell you what the
Hmm.
hell a fair share is, right? They'll sit
No.
there and they'll talk on TV and they'll post on social media and tweet or X now, whatever their comments are. People need to be paying their fair share of taxes. To me, and you're a professional, so you can back me up and tell me I'm right, and I'm not going to argue with you if you do. But to me, isn't the definition of paying your fair share paying only what you actually owe according to the tax code?
Well, that's exactly what that means, isn't it?
I'm so glad you
And
backed me up
it's
on that. Thank you.
and it's and it's not.
Greensky Unleashed is powered by ProfitMax. Did you know that 93% of businesses overpay on their taxes? Do you pay too much in taxes? A recent study showed that businesses are overpaying between 34 and 71%. ProfitMax has proven, legal tax strategy solutions to reduce your tax burden. I'm not only a client, but I even joined the team to help other business owners just like me pay only their fair share and nothing more. Go to profitmax.co. That's profitmax.co. Profitmax.co to find out more. You can even connect with me there, as you should. And I'll help make sure that your tax bill is legally as low as allowed. ProfitMax. Keep your cash.
About having a tax plan that is loopholes, because yeah, sure are there loopholes, but loopholes to me suggest that it's a you're playing a trick on the IRS, and eventually they might find out, they might not. Uh, I firmly feel like having a tax plan means that if I ever get audited, which I have been before, and I didn't have a tax plan, and so I was without working papers to support things that the audit ended up going okay, but I didn't have a team. I didn't have working papers. I didn't have these things that I know a tax plan automatically provides for you. So it was, to me, it was the warning sign to start figuring out where those things are offered. And I reached out to so many people that I know that are business owners, professionals, high income earners, and nobody knew where to go because tax planning isn't a thing, and it wasn't a thing. It's slowly starting to become that. But the problem is, where do CPAs go to educate themselves? They don't have time to stop what they're doing in tax season and go and take this course that is going to allow them to then, you got to have the time to study, you got to have time to take a course, you got to have time to then do practice tax plans. It doesn't exist. So you've got more work on your plate because there's fewer CPAs, and so your year goes longer than ever. And you've got to have downtime, or you're going to truly burn out, and that's the problem we're facing in this industry. So yeah, I think that you hit it on the head.
So let's talk about CPAs not having any time, right? Because I think there's this common misconception that CPAs are really busy. We all agree CPAs are really busy from January 1st to April 15th. All right,
Hmm.
they are crazy busy. And then people think that, well, okay, why wouldn't they have the rest of the year? I mean, they're cramming basically for like 3.5 months and just balls to the wall. And why wouldn't they have time? But I think
Hmm.
most people miss or do not understand that most of America probably also extends their filing. I mean, I'm guilty of it. It happens to me a lot. Where we go, okay, you know what, we're gonna file for an extension, and then our CPA, our tax team, it happened to us this year. We'll work on it, and then we have until October 15th. But if we have until October 15th as a business, then that would mean that the CPAs are working on taxes and tax filing until October 15th. Is that the primary driver as to why they don't have time?
I think it's a big driver. I think it's a combination of it's gotten more complex, and so you take the complexity issue, and I think tax returns, especially business tax returns, they're not as quick to be able to file those anymore. They're not as easy to file as they used to be. And so I've seen it with a number of CPA firms. They already know that that April deadline is not going to happen, and so they extend quite a number of them. And then they get I mean, Thomas, I've seen this so many times. The CPAs have incredible hearts. I've met hundreds of CPAs in my life, and they all have this heart about tax filing. They love it. It's in them. And so they take on clients after April 15th or after the deadline who are on extension and who need somebody to do their filing. Their CPA either walked away or they lost confidence, typically, walked away, retired, left the business, and they take them on. They know they don't have the bandwidth. They know they want to be done by June, but they take them on, and it's becoming just so complex out there with the number of firms that are. I mean, they're facing this, and they're looking at a client who's desperate. I need some help. I need somebody to do this. They take them on. It's for years it's been a problem in the primary care business, right, with doctors full, not being able to take on any new patients, and they just say no, we're full, because it's the gatekeeper, right? But so many CPAs, they are the gatekeeper, and so they have somebody who's facing them, and they look desperate. They're in tears. I've run into that many times where someone is literally at their wits' end. They have 6 or 7 entities, their personal return, and their CPA just checked out. Think about the CPA in Georgia who died. He died right before tax filing. So how many of those clients had to go on extension, and
All of
where
it.
did they go?
Right.
And so he was the firm. I mean, 300 clients, and they had to go find somebody else just like that. And the IRS doesn't care. There was no extension beyond September 15th and October 15th because CPA died.
And it's not like because the CPA died, it's not like the firm turned around and went, well, everyone, the CPA is dead, so go to firm, XYZ. They'll take you.
Yeah.
Now they're just scrambling.
Yeah, he was the firm, so it was literally scramble, scramble, and there was a lot of really good clients there who had their ducks in a row, and it would have been easy for him, I'm sure, to complete a lot of those on time with 1 week left because he had done it for so long. But then take him out of the equation, another CPA. I would imagine it's kind of like a surgeon fixing another surgeon's mess. You got to stop and you've got to really take things apart and understand, okay, was it done right in the first place? I'm using the prior year's returns to help be a guide for me. Was that done right in the first place? So I think there's a lot of stress out there when you talk about a generation, say the baby boomer generation, not just retiring. Medicare has a statistic that 10,000 baby boomers a day are dying over the next 20 years.
How many
And
of
I
them
think
are
that's
CPAs? I'm just kidding.
Yeah, no, but that's what my point is. Like, how many of those are also retiring over the
Yeah.
next 10 years? And then also some of them won't retire. They'll die on the job because it's their passion. I know a bunch that are in their 70s and they're not going to stop. They love it. And it's their life. Take them away from that and they lose the will to live.
So I'm gonna have a takeaway from this conversation. I might have two actually, and I want to share these with you and just kind of get your thoughts from. The first takeaway is something you just said. You used a medical analogy, surgical analogy, right? And so it's almost like, and if I'm wrong, please correct me, but it's almost like a CPA might be a really good general practitioner, But if you need to have brain surgery because your brain is a complex thing, you probably want a neurosurgeon. You wouldn't necessarily go to
Hmm.
your primary care physician. Or maybe, if you've got to have back surgery because you've got a disc problem, maybe around your neck, or for me, I've had it. So uh,
Hmm.
L1S1, that was fun. Did I want to have an orthopedic guy, or did I want to go with a neurosurgeon to make sure that my nerves weren't accidentally damaged and I couldn't walk again? So, is that a fair analogy?
Yeah, I think it is a fair analogy. I mean, it makes a lot of sense, really, because this is something very complex. And I talked to enough CPAs who literally just say that's not my area of expertise. I put the right numbers in the right boxes. That is a specialty. There are plenty of tax planners that are really good at what they do who don't file taxes either because they spend so much time on the planning side. That's a full time engagement. You're talking about engaging with the client multiple times a year to get an idea of how the business is doing for the year, what's changing, is it up, is it down, is it maintaining. You also get into questions about I want to sell, I want to acquire, because if you're going to sell, you don't have a tax plan, you are going to bleed money upon the sale of the business. And so we're running into lots of clients, baby boomers, and not actually even younger, who are saying, I've got a 1 to 5 year time horizon. I don't know if it's going to be 5 years, 2 years, 3 years, but that's something your tax planning team along the way can help me find a runway to keep as much as possible. That's a specialty. That's the neurosurgeon, right? When I had brain surgery for a brain tumor, I interviewed, and it had to get down to this, Tom. I interviewed neurosurgeons, and then it hit me. No, 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 no. First three neurosurgeons that done less than one brain surgery. I think
Mm.
one did one, and the others did none. They did spine surgery, and that's awesome. But you're not going to cut my brain in half. I'm sorry, I'm not going to let you do that. I find a brain surgeon who was referred to me, and I drive a long way to see them. He's done 1,200 brain
That's the
surgeries,
guy you want.
and yeah,
Nobody
so
thinks that way about taxes, though, Jeff.
yeah, but
We all we all we all
they
trust our accountants, right? They're our CPAs.
yeah,
We never question it. We never go for the second opinion when it comes to CPAs. Why is that? I mean, this is just something that I think in my head. Uh, the
yeah.
other the other takeaway that I think is worth mentioning that I had from talking to you, and and full disclosure to the audience, I mean, I am a client of tax strategies. It's erased my tax bill. Basically, I used to have a sizable tax bill, sizable always being relative, but it basically erased my tax bill because it was a completely different thing. It was a different animal. But I think my main takeaway in terms of my earlier question, what should somebody even be thinking about? What should they be asking themselves? If your CPA can't look you in the eye and say, you know what, I can identify every single tax code, put it in writing in advance for what you are doing with me,
Hmm.
then maybe you probably don't have the right CPA. Because when it comes to an audit, which no one wants and can easily happen because hypothetically, the IRS is hiring, we'll see where that actually goes. The question you should at least ask yourself, if you're listening to this somewhere out in the ether, is is my CPA literally documenting in advance what could happen for an audit? And I think the
Hmm.
answer to that is no. But in tax planning, this is something that you guys do. And that's a game changer, in my opinion. Yes?
Yeah, it is. Those three letters are the scariest letters to anybody that has a business or has a decent tax return. Heck, I think it's relative, right? Because if your income's 50,000 a year and you get audited, you don't have necessarily the cash flow to support somebody that comes in from the IRS and says you owe us $20,000. That would eat you alive. So I think it is relative because if you're talking about what does it mean to have a tax team, a whole team of experts, people that have been through many audits, handle audits, did them on some very seriously large corporations and clients. So working with an audit is to them, it's peeling back the onion. And they understand the avenues, they understand that the IRS is not the greatest communicators in the world. So uh, they know the process, right? So I also feel good about, like, you have a tax plan, I have a tax plan. I like the fact that I have that representation. I call it the 9 foot tall centurion warrior standing next to me. I love that feeling because at the end of the day, sure they're hiring. What does it mean? I don't know. because
Right. We don't
the
know.
landscape always changes. Somebody else can, the other side could get elected next year, could be a Republican, and then they squash all that. I don't know. All I know is the tax code is complex, it changes constantly. And so if my CPA is mentally checking out because they're at that point where they're like, I'm done with this, and they file my tax return and they're not focused and they don't have all the tax code changes that came into effect for that year, what does it mean? I don't want to go through that.
And we as business owners have a long history of never getting second opinions when it comes to our CPAs. So that's
Yeah.
probably, I would say that's probably got to be the primary takeaway from this. So Jeff, we're gonna wrap it up. And like I said in the beginning, there's so many areas where I think that just conversation with you could open up and enlighten people as to some of the complexity of the tax code and what people can do
Yep.
to protect themselves, from having to be exposed to taxes. So I'd like to have you back on. We'll schedule a time to do that. Um, where can people learn more about this? I can say Profit Max. Call me. I'm totally available to you. People on my team are available to you. But where can people learn more about Lifetime Advisors?
Well, our website, lifetimeadvisors.com, is a terrific tool. But Tom, I would say the best tool is to have them talk to you,
Oh yeah,
because
do it.
you can go through the website with them, and that's kind of helpful. But you've had a tax plan done. I always say that the best person to talk to is somebody who has had a tax plan done, so you can better understand the difference between life before and life after, what it meant to you, what you were able to do with that additional cash flow to grow your business to a future higher equity value, what it meant to you to stop the bleeding when you started looking at that overpayment in taxes. Because again, our proprietary track tax plan shows you that it has a number on it. Everybody wants that number, right? It's kind of like that ING commercial that showed this, people walking around with their number. That's what you're going to have. You'll know the minimum amount we know we can save you in taxes using our tax plan. Everybody wants that number. They want to know, at least they want to know, what am I overpaying? That's what I think everybody owes themselves, is to have the visibility. So if they talk to you, they can understand, Tom, how did that work to you when you got your tax plan? What did that mean to you? What did it tell you about your business? And as you implemented that, how have you looked at your business now that you are truly lean and mean? And quite frankly, if I'm a business owner and I'm going to need to go get an SBA loan in the future, I'm going to need to be as lean and mean as I can and get as much of the cash flow I need to be having in my business, because that's what the banks are going to want to see. They're going to be ultra picky. But Thomas, I'd have them go to you. I think you've got the knowledge. You've got clients that have engaged in tax planning. You yourself have, but I think you're the best resource for them.
All right, you heard it from the horse's mouth right there. You need to contact me. And the reason you're going to contact me is very simple. Anyone that's listening to this who happens to own a business, it doesn't matter how big or small, just contact me, because the fact of the matter is we're going to get you that second opinion on your CPA, on your taxes. It's a great way to at least see if you are overpaying. And if you are overpaying, it can free up that cash flow and improve your business. So, Jeff, I thank you again for being a guest. If you like this content, if you like this show, as you should, because that is what you should do, is like it. I do it because you should like it, damn it. Please, please, please share it, like it, 5 stars. That's the only rating that's allowed. And we'll see you on the next one. Thank you so much, Jeff.